Hello, fellow traders. 'Tis I, the rumpled one. Buy high, sell low. Now, conventional wisdom tells you to buy low and sell high, but we are trading. And you have to remember, high and low are relative terms. What is high? What is low? It's relative. So let's take a look at some of the charts. Now, looking at the dollar Canadian here, you would think that you would want to do what if it was right here? You'd say, well, we should buy it. But what if it was right here? Right here. Oh, well, this is hindsight, right? Because we're looking at it and we're saying, yeah, it goes up. But let's look at it from a different perspective. You see here, you want to sell high, right? But the thing is, it's still been going up. We're looking at M1. If we switch over to D1, right here it was high. And conventional wisdom would have said sell high. But price continued to go up. This is a breakout trade. I think I've done a video or two on breakout trades before. So you see here, if you look at the daily, right here, you'd say, hey, well, that's high. I think I should do what? Sell. No, buy. It's breaking out. Once again, we're looking at hindsight, right? So right now, we're in the holo zone. Here's the highest open, right? If it gets up to here, what do you want to do? Sell or buy? If it gets down to here, what do you want to do? Sell or buy? Well, here we want to sell. We want to sell low. Because if it breaks out of this channel between the high and the highest open, it's going this way. So you see here, conventional wisdom doesn't work. You want to sell low. Because, once again, with the breakouts back here, this was the high. If we would have sold high, we'd be in drawdown. Let's look at another pair. Okay, buy low. Oh no. You want to sell the low. Why? Because it broke out. Do you see that? Let's look at a different example. Okay, the rat zone. Once again, what are we doing here? We are going to sell low. Here, what are we doing? We are buying high. Because once again, it's relative. So when you're looking at a particular candle, especially if you have what's called consolidation after a, what do they call it? A trend. They move, okay? You can see here price was moving down. Price here consolidated. So what do you want to do? You want to buy high or sell low. So remember that. Buy high, sell low, but it's all relative to the candles. So here we go again. Here's the CAD. This is our highest open trigger. We want to sell low. Oh, maybe I'll leave this video running and let's just see what happens here. Okay, it's going back up. And I guess I can explain a few more things for the people that received the beta version of the TRO zones indicator. And I've been working on it a little bit more too. So right now we're looking at the holo zone and we're looking at the CAD. You see how this is reversed. I reversed the colors instead of putting the star because, or the asterisk, because this is much easier to see which one we're looking at. So higher. And so where is the rat zone chart? Where'd I put the rat zone chart? Here it is, the last one. Let's click this over to 15 minutes. See here with the TRO candle, multimeter candle color number, we can see how many bars in a row. So we're looking at 15, we got 3, now we've got 1, 3 green in a row. You can see it's just stuck in the rat zone right here. And you can see here it's 7 below the high, or you can look up here, 7 below the high. 135 pip run up from the bottom. I'm not sure what made the euro go crazy today, but it's definitely picking up some steam here. Now, we see here, looking at the fib zones, you can see it busted out of yesterday's fib zone. So if we go back to the zones, you can see here the dollar Canadian's at the 143, 144 level. You can see it's going back up here, but we're looking for that short to pay off. See, we've only got, what, maybe 10 pips, so that's, the stop loss is very small. Okay, it's also out of the, it's above the ATR zone up here. It really took off. So once again, see, here was a high. The high at the ATR zone. Conventional wisdom would have said to sell. Now, you could have had some little shorts, but also the longs were paying off. Something was pushing the dollar CAD up, and that something is oil prices went down, which affects the Canadian dollar more than it does the US. So that's what drove the US Canadian up today. Now, a little fundamentals on the trading there. So we looked at the ATR zone, we looked at the holo zone, and we looked at the fib zone. We also looked at the rat zone over here. So you can see it's still in the rat zone with the 51 rat trigger. Now let's see, we know it's outside of the buy zone because the buy zone would be down here with the open, so it's way out of that area. And also, it's crossed above the D1 high, which is right here. That's what the XAD1 means, that it crossed above. Maybe I should use a little x. The D1 high, right there. See, it crossed it here, and I don't know, did that low get below it? It's hard to tell. Doesn't matter, it crossed it. So anybody taking, once again, buying high, you'd be up about 40 pips right now. That wouldn't have been a bad trade. So we can just see what happens here. It's almost quarter till the hour, quarter till noon New York time. I guess we could take a look at another pair. Let's look at the euro pound. And you can see here the euro pound. Once again, buying high, took off. Now we've got the open high, which is the holo right here. See, it just went below it, so it's no longer in the holo zone. It's in the upper rat zone. Once again, past the ATR and at the 167 fib level. And it crossed above the daily high, which was right here at 84.83. And that would be what? 17 plus 26 is 43 pips. So you can see, taking those wick zone breakouts. So if we go over, where is the wick zone? Here we go. Right here, the wick zone. I believe this is the, there's the monthly open. You see it just shot up like a rocket there. Just crossed above those horizontal lines. Okay, we can look at it here. You can see once again it crossed above the weekly open. That's always a strong move. Another horizontal line. And we're in the holo. You see, right now, if you had taken that short, you'd be making a little bit of money. You got a pip in your pocket or so. Actually, you probably don't because of the spread. We looked at that. And you can see here in the rat zone. Actually, when it's in the rat zone, you can just almost enter the trade. See, right here we'd be ready for a rat reversal. Green candle closes, followed by a red candle. You go short at the low of the red candle. That is a rat reversal. Oh, let's see what else looks interesting. We've got the New Zealand US dollar here. Just came back into the lower ATR zone. And we've got the Australian dollar doing the same thing. You can see here it's at minus 30. And the New Zealand dollar, US dollar was minus 32 on the fib zone. You see they broke out of the previous day's low here. So once again, selling low would have netted you about 31 pips. Okay, I've got about 3.5 minutes here, and I think we were really looking at the dollar Canadian to see how that trade's doing. Okay, that holo trade, you could have probably scalped out for a couple of pips, or you could still ride it to see what happens. But that's it, fellow traders. Once again, the idea is to buy high and sell low. Look at the breakouts. Remember, high and low are relative terms. So, as always, it's not what you trade, it's how you trade it. The Rumpled One, signing out.